Hey everyone, welcome to Elevated Living. My name is Akash Rao, and today I'm going to share with you a summary of one of the most popular personal finance books of all time, Rich Dad Poor Dad by Robert Kiyosaki. If you want to read the full book, you can find it on Amazon. Simply click on the link in the description. This book tells the story of how Robert learned different lessons about money, work, and life from his two fathers, one rich and one poor. He also gives some practical advice on how to develop the mindset and financial knowledge you need to build a life of wealth and freedom. If you're interested in learning more about this book, make sure to watch this video till the end. And if you enjoy it, don't forget to like, share, comment, and subscribe for more videos like this. But before we get into the summary, let me ask you a question. Do you think your house is an asset or a liability? If you said asset, you might be surprised by what Robert has to say about it in this book. He claims that your house is not an asset, but a liability that costs you money. And he explains why in one of the main lessons from the book. So what are the other lessons? And how can they help you achieve financial success? Let's find out. Alright, let's start with the first lesson from Rich Dad Poor Dad. Lesson 1, the rich don't work for money, they make money work for them. The first lesson Robert learned from his rich dad was that the rich don't work for money, they make money work for them. This means that instead of trading their time for money, they invest their money in assets that generate income for them. Assets are things that put money in your pocket, such as stocks, bonds, real estate, businesses, etc. Liabilities are things that take money out of your pocket, such as expenses, debts, taxes, etc. The poor and the middle class work hard to earn money and then spend it on liabilities. They are trapped in a cycle of working and spending, never accumulating wealth. The rich work hard to acquire assets and then use them to create passive income. They are free from the rat race and can enjoy financial independence. The key to becoming rich is to increase your assets and decrease your liabilities. This way, you can have more money coming in than going out, and eventually reach a point where your income exceeds your expenses. That's when you achieve financial freedom. Lesson 2, financial literacy is the key to understanding how money flows and how to create assets. The second lesson Robert learned from his rich dad was that financial literacy is the key to understanding how money flows and how to create assets. Financial literacy is the ability to read and understand financial statements, such as income statements and balance sheets. These statements show you where your money comes from and where it goes. They also show you your net worth, which is the difference between your assets and your liabilities. By being financially literate, you can see how money flows in different directions, from income to expenses, from assets to liabilities, from cash flow to capital gains. You can also see how different financial decisions affect your financial situation. For example, buying a car with a loan might seem like a good idea at first, but it actually reduces your cash flow and increases your liabilities. On the other hand, buying a rental property with a loan might seem risky at first, but it actually increases your cash flow and adds an asset to your balance sheet. By being financially literate, you can also learn how to create assets by using other people's money, OPM. This means using debt or equity financing to leverage your money and acquire more assets. For example, you can use a mortgage to buy a house that generates rental income or use venture capital to start a business that produces profits. The more assets you create, the more income you generate. And the more income you generate, the more assets you can create. This is how the rich get richer. Lesson 3, your house is not an asset, but a liability that costs you money. The third lesson Robert learned from his rich dad was that your house is not an asset, but a liability that costs you money. This is one of the most controversial lessons from the book because it goes against the conventional wisdom that your home is the biggest investment you can make. Robert argues that your home is not an asset because it does not put money in your pocket. Instead, it takes money out of your pocket in the form of mortgage payments, property taxes, maintenance costs, insurance, etc. He also argues that your home is not an investment because it does not appreciate in value as much as you think. He says that most of the appreciation you see in your home is actually inflation, which erodes the purchasing power of your money. He also says that the real estate market is cyclical and unpredictable, and that you can lose money if you buy or sell at the wrong time. Robert suggests that instead of buying a big house to live in, you should buy a small house or rent an apartment and use the extra money to buy income-producing assets. He says that by doing this, you can increase your cash flow and net worth, and eventually afford to buy your dream house with passive income. Lesson 4, the history of taxes and the power of corporations show how the rich use legal structures to their advantage. The fourth lesson Robert learned from his rich dad was that the history of taxes and the power of corporations show how the rich use legal structures to their advantage. He explains that taxes were originally created to tax the rich, but over time, they shifted to tax the poor and the middle class more. He also explains that corporations are legal entities that allow the rich to protect their assets and reduce their taxes. He says that corporations act as a separate person from their owners and can own assets, incur debts, sue and be sued, and pay taxes. He says that by using corporations, the rich can control more money and pay less taxes than the poor and the middle class. He says that the poor and the middle class earn money, pay taxes, and then spend what is left. The rich earn money, spend it on assets, and then pay taxes on what is left. He also says that by using corporations, the rich can deduct many expenses from their income, such as travel, entertainment, education, etc. He says that these expenses are paid for by pre-tax dollars, which means they save money on taxes. He also says that by using corporations, the rich can benefit from tax loopholes and incentives that are not available to individuals. Robert advises that if you want to be rich, you should learn how to use corporations to your advantage. He says that by doing this, you can legally reduce your taxes and increase your cash flow. Lesson 5, the rich invent money by creating opportunities and solving problems. The fifth lesson Robert learned from his rich dad was that the rich invent money by creating opportunities and solving problems. He says that the poor and the middle class see money as something fixed and limited. They believe that there is not enough money for everyone and that they have to compete for it. He says that the rich see money as something flexible and abundant. They believe that there is more than enough money for everyone and that they can create it. He says that the rich use their financial literacy and creativity to find or create opportunities where they can make money. He also says that the rich use their skills and knowledge to solve problems for people and get paid for it. He says that the bigger the problem you solve, the more money you make. He says that by solving problems, you add value to people's lives and create wealth for yourself. Robert encourages you to develop your financial literacy and creativity so that you can invent money by creating opportunities and solving problems. He says that by doing this, you can make money out of thin air. Lesson 6, work to learn, not to earn. Skills and knowledge are more valuable than money. The sixth lesson Robert learned from his rich dad was that you should work to learn, not to earn. Skills and knowledge are more valuable than money. He says that the poor and the middle class work for money because they lack financial literacy and skills. They depend on their jobs for income and security. He says that the rich work for skills and knowledge because they know how to use them to make money. They are not dependent on their jobs for income and security. They are constantly learning new things and improving themselves. He also says that there are different types of skills and knowledge that you should learn if you want to be rich. He divides them into two categories, technical skills and soft skills. Technical skills are skills related to a specific profession or industry, such as accounting, engineering, programming, etc. Soft skills are skills related to human interaction such as communication, leadership, negotiation, etc. Robert says that you should learn both types of skills, but especially focus on the soft skills. He says that the soft skills are more important for becoming rich because they allow you to work with people, influence them, and create win-win situations. He says that the rich are good at working with people and building teams. Robert suggests that you should not be afraid to change jobs or careers if you can learn new skills and knowledge from them. He says that you should not be loyal to a company or a profession, but to yourself and your education. He says that by working to learn, not to earn, you can become more valuable and more wealthy. Conclusion. So these are the 6 main lessons from Rich Dad Poor Dad by Robert Kiyosaki. I hope you enjoyed this summary and learned something new from it. If you want to read the full book, you can find it on Amazon or any other online bookstore. If you would like me to summarize any other book in the future, please let me know in the comments. Now I have a question for you. Which lesson did you find the most interesting or useful? Let me know in the comments below. And if you liked this video, please give it a thumbs up and share it with your friends. Also, make sure to subscribe to my channel and hit the bell icon to get notified when I post new videos. Thank you for watching, and I'll see you in the next video. Bye.